There are a lot of indications that a significant economic crash is on the horizon. Over the past few weeks, stock prices have shown some very negative signs and have been on the decline. Just prior to the 2024 election, Elon Musk was openly talking about how it may be necessary to usher in a temporary recession. There are a number of factors that could potentially cause or contribute to such a crash. The unprecedented federal spending cuts that Musk and the Trump administration are pursuing could by themselves have a huge economic impact. There is also the ongoing tariff war that Trump is engaging in, whose outcome is very uncertain and may just be getting started. AI has also been developing at an incredible pace and threatens to upend how work is done and the entire economic system. A crash could also be brought on by something else entirely that people are not yet paying attention to. For some people, though, an economic recession is not necessarily a bad thing. It's a basic idea among economists that recessions serve an important role in a capitalist economy. They are a fundamental part of the natural cycle of growth and contraction that economies experience. During recessions, companies are forced to cut employees, eliminate waste, and maximize their efficiency. This can definitely be a good thing, but not necessarily in a universal way. For the people who own these businesses, either directly or as stockholders, there is a clear benefit. They benefit from the increased efficiency and subsequent growth of profits. On the other hand, for the employees who lose their jobs, it is not such a good thing. The many people who lose their jobs and others who are in the job market are forced to accept much lower pay because there are fewer jobs and there is much more desperation among workers. This, of course, further benefits the ownership class, as they now get to pay their employees less. They also benefit as many businesses and other assets become cheaper and they have the opportunity to buy them up and expand their ownership of the economy. All of these factors are at play during a recession, but they do not necessarily guarantee anything. Each recession can have a different outcome. Some lead to a period of growth that is beneficial to all segments of society. However, the dominant trend of the U.S. economy over the past 40 years has been the rapid rise of income and wealth inequality. With this as a background, it provides useful context for understanding a potential future recession. A better understanding can also come from looking at one of the most recent recessions, the 2008 Great Recession. A very interesting trend emerged following the recession that can be seen by looking at the wealth of families at different levels of the wealth distribution. First, we have the top 10%. Their wealth peaked right before the recession. It then declined over the next few years, but then recovered and by 2016 reached an even higher level than its previous peak. For those from the 51st to 90th percentiles, their wealth declined through the recession, but by 2016 it had returned to its pre-recession level and then increased slightly above that by 2019. The 26th to 50th percentiles were hit even harder. Their wealth levels remained low for several years after the recession, but eventually began to recover. However, by 2019, they were still below their 2007 levels. Most shocking is the wealth of the bottom 25%. Their wealth dropped dramatically during the recession, and then didn't recover. The economy overall did recover, and those in the top 10% have done very well, but families in the lower part of the wealth distribution were wiped out and saw no recovery. This trend of growing economic inequality has continued since then. The COVID recession of the 2020s also saw a massive transfer of wealth towards the upper classes. Many of the laws, institutions, and systems that are in place and are designed for the benefit of wealth and the economic elites have remained and have even been strengthened. These factors have driven growing economic inequality since the 1970s and continue to do so. If there is another recession, it seems likely that the pattern of the 2008 recession will repeat itself. While in 2008, it was the bottom 25% who never recovered, This time, it may be the bottom 50% who don't. A future recession will likely be even worse because of the development of AI. Businesses will have the opportunity and motivation to push even more towards replacing their employees with AI. This process is already in place, and a recession would likely accelerate it. While many people will lose their jobs, it will, however, be an opportunity for large tech and AI companies to make huge profits, further driving inequality. Inequality has been continually expanding over the past several decades, and recessions seem to have the effect of accelerating this trend. Both gradually and at times in big leaps, this is driving working-class people further towards a status of indentured servitude. Already, it is much harder for people to buy their own homes. Many people are becoming permanent renters, which greatly limits their ability to build wealth and maintain their independence and freedom. High inflation has put further strain on people and made conditions for many even more desperate. This level of economic inequality that we are currently facing is unstable for the economy and society. It will eventually reach a breaking point. An economic recession could very likely be the thing that brings it to that point. For a more in-depth look at this issue, check out my video on income and wealth inequality in the US.